Hey, what's up you guys? Welcome back to the channel. So today I want to talk about some strategies that I used to pay off my house in 8 years. So this here is my first home that I bought back in March of 2009. It was a foreclosure. It's a single family home with 2,167 square feet and I paid $194,000 for it. I got a 30-year FHA loan and put 3.5% down and asked the bank to cover the closing costs. My monthly mortgage was about $1,550, which included principal, interest, taxes, and insurance, as well as PMI. Now that you've seen the house and we got the numbers out of the way, let's talk about how we paid off this house in 8 years. Now I want to point out that we did not use the HELOC method, and HELOC stands for Home Equity Line of Credit. And to be honest, all those videos on YouTube, I think they're all just scams. If I were you, I would stay away from the HELOC and just stick to some of the tips that I'm going to tell you in a little bit here. So this home that I purchased would have probably been paid off a little bit sooner had I not bought this second home that I live in now. And also I had 2 children along the way and I bought a couple cars along the way, and so it kind of extended it out to 8 years. But I still think 8 years is a pretty short amount of time. So let's get into the methods. The first method I have is to make sure that you get the right loan. So I mentioned earlier that I got a 30-year FHA loan. If you watch my other video, you'll see why the FHA loan is pretty terrible. So I went and got a new conventional loan and I refinanced out of the FHA loan. So, refinancing can save you a lot of money, especially if the interest rate is lower or it gets you out of a terrible loan. And so I wanted to make sure I set things right, and I wanted to get rid of the PMI that I was paying on the FHA loan and also get the balance down to 80% so I can just have a fixed monthly payment that doesn't really change very often. So I went from a 30-year FHA loan to a 30-year conventional loan at 4.125%. And the reason why the interest rate is a little bit higher is because I actually converted the property to an investment property when I bought this second home, and so I had to get an investment loan. And usually the rates are a little bit higher when you're doing an investment property versus a primary residence. So my payment went from $1,550 a month down to $1,100 a month. I had to put a little bit additional principal in there to get the loan down to get rid of the PMI, because conventional loans you have to get below 80%. So by doing that, I paid $1,100 a month for the remaining of the loan. Once you get your refinance in order and you have the right loan, the next thing you can do is pay additional principals. So we took our loan down from $1,500 a month to $1,100 a month, and we didn't necessarily take the difference and spend it on ourselves or buy a new car or anything like that. We ended up just paying the additional principal to make it seem like we were still paying $1,500. And at least this way, instead of paying PMI and some of the other junk fees that I had to pay for FHA loans, I ended up just paying additional principal to the loan. So instead of paying the $1,100 I normally would pay, I would pay $1,100 plus $400 additional principal. So there are a few calculators you can use online to kind of calculate, how much time you would save or shave off by paying additional principal. I'll link a couple down in the description below so you guys can check it out. But we knew that the $400 additional was going to help overall in the long term, so we just continued paying that $1,500 a month. One other method you can do is you can do additional payments. So most people get paid every 2 weeks, which means that you get paid 26 times a year. And typically a mortgage is paid at the beginning of the month or some day in the month, like the 4th or the 1st. And if you do that, it's only going to be 12 payments, which works out to be like 24 weeks or so. So by doing 26 payments, you actually will get 13 months instead of the 12 months. So you get one additional payment that you can pay towards your loan. And by doing this, you can use a couple calculators, but it can shave off maybe 6 or 7 years from your loan. Now, we personally did not do this because we didn't want to go through the hassle of kind of setting all of that up. We were already used to paying the mortgage on the 1st of every month, it aligned with this house. And we knew that at the 1st of every month, we would just have a bunch of money get taken out of our accounts. That's it, you guys. Well, thank you for watching the video, and I hope you enjoyed it. Hold up. Don't leave yet. I actually have a couple more strategies for you guys. So those ones were the obvious ones. So let me share with you guys what we did to pay off our house in 8 years. So the first thing is to make sure that you have a decent wage. So when I bought my house, I was making $48,000 a year, and the house cost $194,000, which seemed reasonable at the time. And just making sure that you have enough income to kind of support the house that you're buying. So, one mistake that I did when I bought the house was I maximized my buying power. Literally, the pre-approval letter stated that I can afford $195,000 or something like that, and I went and bought $194,000. Now, I knew that this was going to be okay because I just started my career and I knew there was a huge ladder that I can climb. And also, my wife at the time was not working yet, so I knew that at some point we were going to get dual income. So in the grand scheme of things, I didn't really maximize my buying power. I actually just, conservatively bought the house that I could afford with the income that I had. And what ended up happening was my wife started working, I started getting raises, and in the span of those 8 years, our combined income was about $130,000. And so, when you think about it that way, we could have afforded a much bigger home. And when I ran a couple calculators just now, it looks like with that kind of income, you can actually buy a $650,000 house. And for me to buy a less than $200,000 home, that made a lot of sense. So that helped accelerate the amount of money we had in our bank account, and in essence gave us enough savings so that when we had enough to pay it down, we just paid off the mortgage. Now, one thing that we didn't do when we got these promotions and raises is that we didn't increase our lifestyle. And this is commonly known as lifestyle inflation. And the easiest way to not do this is to just assume that you were still making the same amount of money as you were before. Just because you're making more doesn't mean you should just go and spend more or buy more things. If you just live the normal life that you were living before, all that extra income just becomes savings. And by doing that, it allows you to save a lot of the income that you're bringing in. And one thing you can do is kind of track your savings rate. And let's say you made 130,000 and you only spent like 65,000. Your savings rate is almost 50% there. I mean, I'm not counting taxes, but you get the point. And literally, we were doing this for about 8 years. And the only thing we would actually put money aside for were things like our 401k matching. We didn't invest any additional money into our 401k. I didn't actually max out my 401k back then. We were focused just on obtaining cash, so that way we had cash so that we can buy another property or pay down the property that we had. So related to lifestyle inflation, when my wife got her job, we told ourselves that we would only rely on one income. And that is because, in the future, you never know what's going to happen. You might get laid off. You might start a family. And to be honest, when you start a family, it's really hard to have dual income because you're going to end up just paying daycare. And at the end of the day, it may just make sense to stay home. So, when we bought this home or whatever home we were going to buy, we wanted to make sure that we can do everything with one income. And ultimately what that meant is whatever the second person made, it just meant that we got to save it all. And it was just extra income that we had that we can pay down our mortgages with. Now, the same can be said for bonuses and commissions. So I was fortunate enough to get bonuses and commissions in my job. And literally we took all of that money and just paid down our debt. And, we paid down, one of our cars that we purchased. And then any of the other commissions that we got after that, we literally just put it into savings. And we had this stockpile full of cash. And eventually at some point, we used some of it to buy our second home. And then we decided, let's just pay off our first home so that way we have that off of our list. With these high wages that we were earning, there's always that urge to kind of, brag and tell people about it. And to be honest, what we did was we just kept it all a secret. Nobody knew how much we were making for a long time. We acted very normal and very, even poor almost. And we just told people we made regular wages, like $40,000 a year. Because we knew that the moment people found out we were making all this money, one, they would get jealous, even though it has nothing to do with them, it doesn't affect them. Two, they're going to start expecting more from us, like, oh, if we go out to dinner, they should pay for it because they have more money. And it wasn't even anything like that. We just kept everything a secret, and all the extra wages we made, we just kept it in our bank account. So we didn't go and buy flashy things, because, buying flashy things, people tend to think that you have money. We drove a Toyota Prius, for goodness sakes. So people just thought we were making normal wages, making monthly car payments like everybody else did. And to be honest, we were doing some of that, but, most of our car loans were paid off in a year or two. And we had a lot of money in our savings that people didn't know about. When we bought this second home, we ended up converting that first property into an investment, and that was around 2014. And that property ended up making us about $7,000 a year when you factor in all the mortgage interest and the taxes and the insurance. So it was about $580 a month that we were making off of that, and we literally just put that right back into the property. So instead of paying $1,500 a month, we started paying $2,000. And that's about $900 additional principal each month. So those were all the incomes and wages we were generating at the time. And even with all of that, it still took us a long time. The extra $900 principal didn't really budge the loan that much. All right, now that the wages are out of the way, I want to kind of talk to you guys about some of the spending habits and some of the ways we live, because I think it has a factor into how much money we're able to save. So the first thing is, when things would break, and things would break all the time, I wouldn't call anybody to fix it. When I first moved into that house, yes, I had to call someone to fix, a breaker on my air conditioner, and he charged me over $400, and I thought, wow, he literally did like 20 minutes of work, and he charged me $400. So at that point after that, I vowed to myself I would never call anybody if it was something that simple. And thank goodness for YouTube, because YouTube has so much knowledge out there, and I'm able to absorb things really quickly. And to be honest, I've never had to call anybody out yet in the 12 or 13 years of owning 2 homes now. So you can see how that can reduce the amount of money you spend on repairs and fixes. The second thing I want to talk about in terms of spending habits is buying cars. So everybody has to buy a car at some point in their lives, especially if they have to drive to work. And me, I've always bought used cars. I've never owned a brand new car in my life, actually. And to be honest, I don't really see or understand the hype around new cars. For me, I like to buy like 2 or 3 year old cars. I bought my Toyota Prius in 2010, and it was a 2010 model. It was just built in 2009. And that car has been giving me 0 issues ever since I've owned it. And I'll tell you a little story. When I was looking to buy that car, I was actually contemplating buying a brand new Camaro SS, and it was kind of the new thing at the time, and people were buying it, and I just wanted one. And to be honest, I just wanted one to show off to my coworkers because they wanted one. And when I sat down, I kind of thought about it long term. I was thinking this car is not going to last me very long. And what I mean by that is I knew I wanted children down the road, and my wife didn't know how to drive a 6-speed manual, and that back seat was really small. So really, it was just a car for me and not for my family. And luckily, I went and bought the Toyota Prius because it was highly compatible with our lives. We like to drive up the coast, down the coast, and it saved a ton of gas. And that's one thing I like about that car, is that it is useful long term. And if you're ever going to buy a car, make sure it's useful for your life long term. Otherwise, you're going to end up just buying cars all the time. So the second car that I bought was a 2011 Acura MDX, and I bought this car in 2013, so it was about 2 years old. And this car cost me about $30,000. And this car I bought because I knew that I was going to have some children in the future. And literally, I think a year later, we had our first child, and we used the SUV to drive us all around. And one of the regrets I had about that car is the fact that it was a luxury car, and it used premium gasoline. And to be honest, I didn't really need all of that, and I'm not really sure why I even bought it. But I should have probably just stuck to something like a Toyota Highlander, which probably would have been like $5,000 cheaper. But it is what it is. Lesson learned. That car hasn't given me any issues to date, so knock on wood. But it's been a highly reliable car. It gets pretty terrible gas mileage, and it uses premium gas. But I'm not going to go and trade in the car to buy a new car and waste more money. We just keep the things that we have for as long as we can until it outgrows us. This next one has to do with shopping and shopping in general. So me, I'm pretty cheap. I don't really like to go shopping. I don't really like to go buy clothes. The only place I really buy clothes from is like Nordstrom Rack or H&M, or even Costco. Like this sweatshirt here is from Costco. I find that a lot of those designer clothes are just way too expensive, and I really don't understand the need for that. My wife is pretty similar in that regard. She only shops at discount stores like Ross and DD's and Nordstrom Rack and H&M. We rarely go to the designer stores, and I don't even know what the designer brands are. And so, we're really frugal, and I'll be honest, on the weekends, we actually go to the local swap meet so we can find deals, and, sometimes we buy stuff from there. Yes, it's weird that we go to the swap meet, but you know what? It makes us happy, and it lets our kids run around for a little bit, and it doesn't cost very much money. And to be honest, it doesn't really matter how much money you make. As long as wherever you're going makes you happy, that's all that matters. And the next spending habit that we never had was the subscription world. And what I mean by this is, in this day and age in tech, and I work in tech, so I see this a lot, is everybody seems to have a subscription to something, right? So like, whether it's Netflix, Hulu, Disney Plus, Amazon Prime, there's so many things that you can pay $10 a month for. And if you think about it, they all add up to a pretty sizable bill. Before, people would just buy TV, maybe it was like $50 a month, and now they've got like 8 or 10 different services that they're paying for every month, and some of them they don't even use. I don't know how you guys have so much time to watch all of these things. I barely have enough time to watch my free TV that I have. So, we never had any of these things. Even Amazon Prime, we had a student account for a long time until they kind of got rid of it. And it was only like $39, I think, annually. And we even shared accounts with family members, and we just split the difference. So I've never had like Netflix or anything like that. Maybe for a trial one time just to see what it was all about. We've only really had 2 bills consistently, and that is our DirecTV bill, which, my wife is the only one that watches that, and the cable internet bill. Aside from that, we never really had any other monthly recurring subscriptions. Now, everybody has bills, so, you have to pay your bills, right? So what I did was, I would look at my bills all the time and try to minimize them as best I can. And I have another video that talks about, car insurance and some of the other things. But I would do this for all of my bills. I would call in to the retention service and I would tell them I'm going to cancel my cable internet. And I knew for a fact they were going to give me a deal, because losing a customer is going to be much more expensive than trying to get a new customer. So they're always try to give you a discount to stay. And I knew this, and I would call in all the time. So I would do this with my TV bill. I think I was paying like $50 for DirecTV, and my internet bill, I think I was paying like $40 or $50 a month. And every time they would raise the price, I would just call right back in and do it. I mean, it would take me about an hour or two for both of them, and it's well worth it, because you only do it one time and it lasts for 12 months and you keep the savings for 12 months. Now, we're just like any other Americans. We do take vacations as well, and the difference with our vacations and some of the other vacations that I see people take is that we tend not to fly very often. We live in California, so there's a lot of beaches and there's a lot of areas that we can visit, like San Francisco or San Diego or LA. And we typically just take a day or two trip and we go there and we enjoy our time. And to be honest, we just pay for a hotel stay and a couple meals here and there. And our vacations are really cheap. And for us, whenever we spent more than $500 in a vacation, it felt like we spent too much money. And even my wife, one time we spent like $1,000 and we almost like killed ourselves. And so our vacations are really cheap, and we rarely go on vacation. And to be honest, I don't even think we went on vacation at all last year. Ever since we had kids, vacation's kind of out the window. But even when we were, without children, we rarely went anywhere. And even if we did go somewhere, it was really cheap. The same can be said for birthdays and birthday gifts. And, me and my wife, we stopped buying each other gifts a long time ago. We felt like this was just pointless. And, if we wanted something, we'll just buy it ourselves. And, playing into all these holidays, it was just pointless. And so we stopped going to Valentine's Day, dinners. We stopped buying Christmas gifts for each other, stopped buying birthday gifts. And, a lot of that stuff, we just celebrated together, and, that's more than enough. And more often than not, most people just buy gifts to kind of show off, to show that, hey, my husband's better than your husband. And for us, we already knew what our plans were, so we just ignored all of that and just said, look, we don't buy things for each other. We just buy whenever we want. And we already have everything we ever would need. So, why am I going to go out and buy my wife an expensive necklace or an expensive set of earrings? She doesn't need any of that stuff. If she did, she would have bought it on her own. And the last tip I have for spending is to make sure that you are optimizing your cash back. And I made another video about this in my channel, so make sure you check that out. But we maximize all of our spending based off of cash back rewards. And so, all the cash back we would get from Costco, all the cash back we would get from Chase, and whatever other bank we were using, we put it right back into savings. Only maybe one time we actually went and bought like a new sofa with it because we needed one. But other than that, this is just extra money, and we don't just use this money and say we're going to go on vacation now. We just put this money aside knowing that, these are our savings throughout the year. It could be 2 to 5% depending on what we spend it on. So we would just take that money and put it right back into our savings account. So you can see there are a lot of strategies we use to save money, and ultimately, at some point we had enough money to just pay off the whole house, and we decided, let's just do it. And some of you are probably wondering, like, what if you took that money and invested it instead, right? Why pay it off? It was already making you money as an investment rental. You had some tax write-offs and all that. And while that is true, and I did weigh that into my mind because I was thinking, maybe we should pay off our second home instead, but we didn't have enough money at the time. And we decided, we just need to own something, because, what happens if I lose my job, or my wife lost her job, or another recession hit? And we just wanted to have, full ownership of something. So we decided, forget all the tax benefits, forget all of that stuff. Let's just pay that house off, and now we can just become official homeowners. And if everything just went to hell and we lost everything, we can always take all of our stuff and our family and move into that house, because that house is pretty large. So, we would have no problems living there, and we would have no more mortgage to pay. The only thing we would have to worry about is the property tax and insurance, which is about $250 a month, and that should be super easy for anybody to afford. So my wife and I have always had that mindset that we could just lose everything. And even in the 12 years that I worked in tech, I kept getting promoted, and my bosses kept telling me I was doing a great job. But I always thought in the back of my mind, like, what happens if I get fired tomorrow? Which I knew was like a 1% chance, but just having that in the back of your brain all the time kind of makes you not want to spend a lot of money and try to secure a lot of things. And so for us, we just wanted to make sure that we paid the entire house off so that we own something in the event that, something catastrophic happened. Now, I told you we made about $130,000 a year during those 8 years, and that works out to be about $1 million in salaries, and you take out taxes, let's just say 40% or so, I'm still left with 600,000. So you're probably wondering like, okay, the house was only 200,000. What happened to the rest of it? Well, I'll admit there were some financial mistakes along the way, and I'm gonna make a new video talking about some of that stuff. And to be honest, if some of that stuff didn't happen, I probably could have shaved off maybe 2 or 3 years on paying off that first home, or maybe even accelerated paying off this second home. But if you're interested in those financial mistakes, subscribe to the channel so you'll see when I post that. So around September 2017 was when we decided to pay off that first home, and we knew that even if we paid it off, we would still have about 5 or 6 months of emergency funds left. So we decided, let's just pull the trigger and do it, and then call ourselves homeowners. And to be honest, I was kind of expecting more to happen. One thing that I didn't get was a letter from the bank letting me know that I paid off the loan. And so that was kind of surprising. You would think, after paying off such a huge balance, you would get some kind of like, congratulations, you're now homeowners, or hey, enjoy your new house. But no, nothing at all. So I don't know if it's just my lender, Caliber Home Loans. I know when I paid off my cars, they would send me something. So it's just odd to me that that didn't happen. Alright guys, so there's no magic, like I said. I mean, really, if you want to pay off your home early, you just got to put in the work and put more money aside to pay it off. And for us, we didn't accelerate the loan. We didn't do a 15-year loan or anything like that. We did pay it off as if we were paying a 15-year loan, but we kept the 30-year loan because we liked the flexibility. And then at some point we had enough money to kind of just pay the lump sum, and we started making like big payments, like $30,000 we paid, and then the final payment, I can't remember the exact amount, but we just pushed it all in there. I think it was like $60,000 or $70,000. Alright guys, so that's how me and my wife paid off our house in 8 years. I know there's no magic secret here. I mean, there's a couple things you can do, like refinance and make additional payments. But really, there's no secret to paying off our house early. I mean, you literally just have to make enough money and save enough money so that you have enough to pay it off. And, there's no trickery or secret behind it. If somebody tells you that, they're probably lying to you, and they probably never even paid off their house to begin with. So hopefully these tips were helpful for you, and if they were, please hit the like button because it helps my channel. If you have any questions for me about any of this stuff, feel free to leave a comment below. I will definitely comment back. And if you're interested in more videos like this, don't forget to subscribe to my channel and hit that notification bell so you're aware of new videos. Have a nice day, guys.